Welcome back to HDIN Research. Today we're peeling back the curtain on a company that's either building the future of computing or the world's most expensive science project, Quantum Computing Inc. They've just closed their 2025 books, and the numbers are, well, they're loud. We're talking about a $1.5 billion capital fortress and a technological pivot that could change everything or evaporate into thin air. Let's decode the gamble. In the world of tech, quantum is a magic word that makes venture capitalists throw money at anything with a cooling fan. But there's the hype you see on LinkedIn, and then there's the hard reality of the balance sheet. Part 1. The quantum hype versus the cold, hard truth. First, the wow factor. QCI's revenue shot up by 83%. Sounds amazing, right? But here's the wait what moment. Their operating losses exploded by 97%. To put that in perspective, for every dollar they earned selling hardware, they spent roughly $70 just to keep the lights on and the lab running. Their business earnings, what the pros call gross margin, dropped from a healthy 30% to a measly 10%. They're growing, yes, but their expenses are running a marathon while their revenue is still learning to crawl. So are they going broke? Actually, quite the opposite. QCI is currently sitting in what we call a liquidity oasis. They pulled off a massive $1.47 billion equity raise in 2025. Imagine a desert traveler who finds a lake of cash. That's QCI. They have $738 million in the bank. This isn't just a safety net, it's a fortress. It means they don't have to worry about bankruptcy for years. But there's a catch. Their administrative costs are 40 times higher than their sales. It's like having a Ferrari in the garage but only having a paperclip's worth of gas to move it. Look at this chart. That tiny blue sliver at the top? That's the actual money they brought in from customers. $0.68 million. Those massive red and orange blocks? That's R&D and general overhead. It's a classic bridge phase. They are spending millions to build a bridge to a future where quantum chips are everywhere. The question for us is, will the bridge reach the other side? Or will they run out of bricks before they get there? Here's where the strategy shifts. QC. I used to be a software company. Now, nearly half of their money comes from selling physical hardware, vibrometers, and network devices. This soft-to-hard pivot is crucial. Why? Because you can't build a quantum internet with just code. You need the gear. Product sales grew over 1,000% this year. They are finally putting real boxes in real customers' hands. How much grain is in the silo? That's what matters. As of 2025, QCI has effectively wiped out its debt. They traded equity, essentially pieces of the company, for a debt-free life. They've got over $700 million in cash and nearly $800 million in investments. In terms of survival grain, they have enough to feed a small army for half a decade. Let's talk tech without the headache. QCI's secret sauce is TFLN, Thin Film Lithium Niobate. Most quantum computers, like the ones at IBM, need to be kept colder than outer space. We're talking colder than your ex's heart, cold. QCI's tech works at room temperature. No million-dollar refrigerators. No massive power bills. It's the difference between needing a cryogenic chamber to run a calculator and just plugging it into the wall. They aren't just designing these chips, they're building the factory. Their AZ Chips facility in Arizona is about vertical integration. In plain English, they don't want to wait in line at a foundry. They want to bake their own bread. By 2026, they want this to be a high-volume foundry as a service. To speed things up, QCI dropped $110 million on an acquisition called LSI. Think of this as buying the packaging expert. Making a quantum chip is one thing. Putting it in a box that actually works in an airplane or a satellite is another. LSI brings 23 patents and a direct line to the Defense Department. It's a shortcut to being mission-ready. Now, for the elephant in the room. Even though QCI is an American company, their lifeblood, the TFLN crystals, mostly comes from China and Taiwan. As we know, that's a geopolitical minefield. If trade tensions flare up in Taiwan, China, QCI's supply chain could vanish overnight. It's a single point of failure that keeps analysts like us up at night. This is the craziest slide in the deck. QCI management has tied their own bonuses to hitting a $30 million revenue target in 2026. Remember, they currently make less than $1 million. They are betting on a 4,300% increase in sales in a single year. That's not a goal, that's a moonshot. It's like going from selling lemonade on your porch to owning a Starbucks franchise in 12 months. Here's the cold shower. QCI admitted they have material weaknesses in their accounting. In simple terms, their internal record-keeping is a bit of a mess. They have $700 million in cash, but they aren't quite sure how to track the paperwork perfectly yet. For an investor, this is a red flag. It means we have to take their financial estimates with a grain of salt until they fix the pipes in their finance department. The road ahead is clear. By the end of this year, they need to integrate LSI. By early 2026, the Arizona factory needs to be humming. And by the end of 2026, they need to prove that $30 million wasn't just a fantasy. It's a transition from cool science to serious business. So is QCI a quantum leap or a giant hole in the pocket? The tech is revolutionary, the cash is plenty, but the execution risk is massive. What do you think? Let us know in the comments. For the full, unvarnished market research report on the semiconductor and quantum sectors, reach out to us at HDIN Research. Don't forget to like and subscribe for more deep dives into the tech that's shaping 2026. See you in the future.